Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. We've got smart listeners. And you know how we know? Because you write to us and ask awesome, intelligent questions. Today, it's another episode of Ask the Guys, your chance to ask the real estate guys some questions and our opportunity to give you our best answers. It's going to be a great show today on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms, and joining me, of course, our co-host financial strategist, Russell Gray.
Hey, Robert.
We're just getting off the summer of syndication. We did a whole series about folks who are either looking to passively invest in syndications, bigger deals, or people that have reached that point in their career where they decide they could do more if they had more capital, and that's been a fun series. Today, we're reaching back into the mailbag because every day, folks like you send us questions, and although we can't answer most of them, we do try to answer the ones that we think have the most general appeal on an episode of Ask the Guys. So a lot of good questions today. Really love to connect with the listeners in this way. We do it every couple of months. Before we're done, we'll tell you how you can get your question to the Real Estate Guys. But we have two caveats. The first is we are not tax or legal professionals. We're not even real estate professionals in terms of licensing or any of that. We have both been licensed in various capacities in the past, but caveat number two is we don't give advice. We give ideas and information. And if you seek legal or tax or other advice, then make sure you're talking to professionals. So with that, let's jump into the mailroom. Question number one comes from Ashley in Hoffman Estates, Illinois. Hi guys, I'm Ashley. I'm 18 and currently enrolled in my pre-licensing course to become a real estate agent. I want to go to college, but I'm not sure if that's my best decision. Would it be possible to do both? The reason I want to go to college is because I want a backup plan, as well as the social aspect, since everyone I know is moving away and I really value having a good social and work-life balance. I would plan to go to school for 2 years. Would it be possible to accomplish both that and getting my real estate license at the same time, or should I just stick with one? All right, Ashley. Well, this is a really great question, and it is near and dear to my heart because I have an 18-year-old son. And this week, most of his friends are headed off to college, but he's not. He instead is going to dive right into real estate, and he's excited about it. We just got back from our first conference together. Russ has been in these shoes with his kids over the years. So I think we have a lot to say about this. And I'll just start by saying it's absolutely possible to do both, especially since you've been very clear about your motives in doing so. You know, I went to college and I'm really glad I did. And I'm not really glad I did because of all the amazing things that I learned that I use today, although probably some of that is true. I'm really glad I did because I met some of my greatest friends on earth in college. We still are friends. In fact, we're about 10 of us are about to go on a big trip together after all these years. So the social aspect is huge. Although there are other ways, as I'm sure we'll discuss here, to get some of that social need. I will say that the idea of having something to fall back on is one we hear a lot. In fact, back in the day, we would have folks show up to these licensing courses to renew their real estate licenses. In fact, the predecessor to our Summit at Sea was DRE at Sea, where people could earn their real estate license required hours for the state of California by coming on a cruise ship for a week and getting all of their continuing education. And we would meet so many people that would say, well, I'm not really in real estate, but I want to keep my license current so I have something to fall back on. And I think that's not a bad way of thinking, but I used to always wonder, how do people think that 100% commission business is something to fall back on? Maybe a college degree could be different.
You know, Ashley, I think this thing is super interesting. Some people who've been listening to the show for a long time may know this, but I first met Robert by going and bringing my then 17-year-old daughter to a seminar on how to jumpstart your real estate career because she was thinking about getting started in real estate. A year later, she got her real estate license and she went into the mortgage brokerage business, did very well, bought a bunch of investment real estate. So I'm a big believer in learning in the real world. When I got out of high school, barely, I went to work with my uncle and he apprenticed me in outside sales. I learned commercial sales in the streets of Los Angeles, and it was a fantastic experience. We started a little business together, and so by the time I was 19 years old, I'd already bought a property, started a business, and so I'm a big believer of learning in the real world. Now, with that said, is it a bad thing to go to college? I don't think so. I went back to college to take some classes. I didn't get a degree. I wasn't interested in that, but there were some things I wanted to learn. In high school, I also was taking pre-licensing classes, so by the time I was 18 years old, I'd already taken the principles classes, the law class. The law class was very helpful to me, so I'm a big fan of that. So if you're going to go to college, I would say don't take general ed, my opinion. I'd say stick to things that are real tactical, practical. Take accounting, take writing, learn media. They probably have all kinds of new marketing or social media or computer type stuff that they didn't have back in my day. But whatever they have, take that. Public speaking. I took a public speaking class, and that was really helpful. Because if you're going to be in business as a realtor and you're going to be out there in the marketplace, you're going to need to learn how to keep track of math. You're going to need to learn how to write contracts, write sales copy. You may have opportunities to present or to be interviewed in media as you're building your brand, building your network. These are all things that you can learn. And when it comes to the social aspect, I would encourage you to go get your social aspect in groups of people that are interested in what you're doing. I think you'll get a much better social experience by joining a real estate investment club or some other type of an investment program, mentoring club, going to conferences, joining organizations, going to meetups that exist around the thing that you're trying to do that you're interested in, as opposed to just being thrown in a blender with a bunch of people that just happen to be the same age that you are. Age doesn't mean anything in the real world. When you're 18, you can interact with 60-year-olds, and that's fine. You'll do business with them. In some cases, you'll have life experience. You'll be mentoring them. I have children that are 25, 30 years younger than me, and they mentor me today in many areas because they've gone on and developed expertise. Even though I'm older, they're my mentors. And so you'll find that as you go out and develop yourself and your expertise, when you get involved in these social circles, one of the key principles of success is to learn how to become valuable to valuable people. And so when you see someone who's a leader, when you see someone who's a top producer, when you see someone who's a successful business person or investor, if you can find a way to get into a relationship with that person and add value as an apprentice, as an intern, as an assistant, as a vendor, it doesn't matter what it is, get into a relationship with that person and learn not just what they do, but how they think. Because the way people who are successful think is very different from the people who aren't. And as soon as you change how you think, not what you know, but how you think, it'll change everything else.
One of the great things about getting licensed today to practice real estate is that there are a ton of online resources for that. I recently had a good friend go through the process, and he has a full-time business, but he was able to, in his off time and spare time, take all the courses and classes necessary, do the practice testing, and so on. So, it's not like you have to go sit in a classroom to get your real estate license. So that's why I think you could do both at once. And then remember, the license doesn't insure you of anything. My dad, the godfather of real estate, used to say, your license in real estate is a license to learn. You're going to learn concepts and things as you take your tests and study for the exams, but most of what you actually need to do to earn a living in real estate, you're going to learn from your broker, from other real estate professionals, and there's a whole thing in business that We call the Pareto principle, the 80-20 rule. Here's how it works in real estate. 80% of all the homes, 80% of all the commissions are earned by just 20% of the agents. So don't hang around with the agents in the office that are the ones that are there making copies and putting together presentations and drinking coffee. Make sure you're around the real top producers. That's a tremendous shortcut. If you're interested in investing in real estate, I think there can be some advantages to being licensed and being used to looking at the inventory. Now, it doesn't mean that you're going to practice in an area that makes a sense to invest, but maybe you will. I like to say live where you want to live, invest where the numbers make sense. Once you have that license, you will learn a lot more about real estate. And even more importantly, you'll be focused. Your head will be in the game. So great question, Ashley. We wish you a ton of luck. And thanks for reaching out to the Real Estate Guys. Hey, if you have a question for us, all you have to do is go to the website at realestateguysradio.com and click Ask the Guys and fire away. This next question comes from Steve in Gig Harbor, Washington. Hey guys, love the show. Couldn't help myself, he says. After listening to your show for more than a year now, reading Equity Happens, and attending the Secrets of Successful Syndication, I am focused on refinancing many of my paid-for rentals and deploying the equity into more. As Equity Happens, I would like to cash out, refinance, and continue to grow this portfolio as large as possible. One thing I've not heard you guys talk about much is at some point in life, we want to stop using all of the equity to purchase more properties and use some to provide a nicer, better retirement lifestyle. What are some of the ways at the end of this real estate investing journey to use this equity to produce lifestyle for my wife and I? This would be in addition to, of course, leaving a legacy of real estate for my children and grandchildren. Thanks for everything, Steve. All right, Steve, this is a great topic and why I wanted to bring it up on today's show. In our book, we have a concept that we share, which we call critical mass. And critical mass divides your entire real estate journey into two parts. And the first part is when you're accumulating assets. You're doing exactly what you've talked about here. Not everybody wants to borrow money out of a property to buy more. We call that rabbit investing. You breed equity that way, but not everybody wants to do that, but it is a way to collapse time frames. And at some point, you cross over the line, you get to this critical mass idea, and at that junction, you really do shift to become a little more of a cash flow investor. So part of it is figuring out that strategy from the beginning.
So, Steve, it's great, and I think we do cover that in the book, as Robert pointed out, so I think that is important. Sometimes I think people confuse the idea that when you're in equity growth mode, cash flow doesn't matter, and that's false. Because one thing you have to keep in mind is that cash flow is equity. In other words, true equity, real equity is a derivative of cash flow. It isn't just because somebody's willing to pay more for the same property, it's because they're willing to pay more for more income. The more income, the more equity. And so you're always focused on cash flow, and the more mortgages you have, the more risk you take, and that's why you get more reward. But the more important your skill of managing for positive cash flow across that portfolio and managing that debt and hedging it against interest rate risk. As you're dealing in residential properties, you're probably, I hope, using 30-year mortgages. When you're doing commercial properties, sometimes those terms are a little bit shorter, and you can get caught on the wrong end of the interest cycle. And if you're watching the news today, you're seeing that happen to some folks. So be very, very diligent to pay attention to the risks that you're taking with respect to cash flow and interest rates on your debt. With that said, once you get to the point where you feel you've got sufficient ballast on your balance sheet, sufficient net worth or equity, the key is to begin to reallocate that to be more focused on the generation of income with less potential for capital loss. And obviously that is the typical 60-40 mentality that stock investing has had for a long time, where you buy equities in the growth phase and then you switch to bonds in the income phase. In this case, it's you're buying properties and then maybe later on you're holding mortgages. You can sell the portfolio that you have or begin to sell it by doing owner carryback. It's a property you know very well, you'd be willing to take back. You just generate income instead of on rents. On the note, that could be a way. You could take your accumulated equity and begin to deploy it across a portfolio of private placements, because by then you're clearly going to be an accredited investor and you can be looking for income generating, professionally managed private placements you could invest in. Obviously, you can buy properties that cash flow well and markets that cash flow well, and they may not be great equity growth markets, but since that ship has sailed for you and you're really just wanting to keep pace with inflation and generate high income, and then you structure those from a financing perspective where they're more likely to cash flow than grow, and that's okay too. So it's an art, not a science. But the basic concepts are just, look for the best deal in the best markets that has the right fundamentals, whether it's on the debt or the equity side, to make sure that whatever you're generating in terms of cash flow and equity growth is keeping you even on the equity side with inflation. You have to be cognizant of that, and then making sure that you're generating enough income conservatively to cover what other debt is in the portfolio, and then whatever your lifestyle needs are.
A big part of this is planning, thinking through with you and your wife, not just about your current needs, but your future needs, and of course, the legacy part. And you can definitely be whiteboarding what that looks like. People have different goals and different aspirations and things they want real estate to do for them. What we've noticed over the years is that when folks concentrate on putting together a portfolio like you're talking about, even if you're borrowing the money out to buy additional property, at some point, the cash flow just keeps increasing. It's hard not to. It's hard to borrow enough money out so that it kills cash flow completely. It's possible, but it's difficult as you continue down the path. So what normally happens is an investor gets to the point where they got so many properties and so much cash flow that they need to make some sort of a change. And those are the things Russ is talking about, either carrying the financing back, doing a 1031 from a bunch of little houses into a bigger property, maybe investing as a tenant in common in a larger property, or as Russ said, a private placement. So there's a lot you can do, but it starts with just planning it. And I'm glad you brought it up, because sometimes it does seem like a rat race. People are just trying to get as many properties as possible. What you're trying to build up is a financial fortress, but also a lifestyle. And the key to it is what we call the wedge. And the wedge means that your income goes up over time, and you'd like your lifestyle to go up over time. But you want to make sure that your income and your wealth is always going up at a steeper pace than your lifestyle, because the difference is the wedge, and the wedge is where the power is. You've already been to the part of town where the people spend everything they make and a little more besides. That's not where you want to be. You want to be prudent about your investing and planning ahead of time. So it's a great question. I would urge everyone to be thinking about that. If you're in your 20s or 30s or 40s, there will come a day when you're going to want to start enjoying the fruits of your labor. Why not plan for that in advance? It's Ask the Guys, your questions, our answers. We've got lots more today on the Real Estate Guys radio program.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've ever dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2024 Goals Retreat January 12th to 14th in Dallas, Texas. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at goalsretreat.com. Get your life back on track, physically, spiritually, and financially. Attend the 2024 Goals Retreat on the second weekend of the new year. Visit goalsretreat.com to learn more and get on the advance notice list. This is no dress rehearsal. Live the life you were meant to. Visit goalsretreat.com or call 888-489-7723 extension 18. That's goalsretreat.com.
Hey, I'm Jim Grant. I'm the editor and indeed the founder of Grant's Interest Rate Observer, and you, ladies and gentlemen, you lucky people, are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station all the time at realestateguysradio.com and your favorite podcast outlets. Every 8 to 10 weeks, we like to find out what's on your mind and take your questions. It's Ask the Guys today. If you have a question for the Real Estate Guys, go to the website at realestateguysradio.com and click the button that says Ask the Guys. I will say that sometimes we get questions that are so specific we would not have enough market knowledge to know, hey, which side of Main Street should I invest on, north or south? We don't know the answer to that. But these general questions can be awesome. This next question comes from Andrew in San Diego, California. Hi, guys. I recently listened to your podcast with Mid-South homebuyers in Memphis, Tennessee, and I'm very interested in pursuing an investment with them. Are there other turnkey providers in different cities that you recommend as highly as the team in Memphis? Thanks, Andrew. Well, first of all, let's talk about what a turnkey provider is. No investor left behind. You can go out and find a rental house anywhere or a property that could be turned into a rental and then go through the process of finding a property manager and putting a tenant in it. And maybe your realtor helps you with figuring out what the market's like and what the rents are like and so on. What a turnkey provider does is usually operate at a higher level. So they have more inventory and they take you from soup to nuts. You typically will buy from a turnkey provider a property that has already been rehabbed with a tenant in it and a performing lease. And the whole idea is no muss, no fuss. You jump right into a property that works. Now, in order to do that, you may pay a little more of a premium than if you had hunted down the bargain property, the worst dog on the street, and gone through all the trouble of getting the work bid and done and all of that. But for busy professionals especially, turnkey makes a lot of sense. And there are hundreds of turnkey providers. We know a few that do a dozen houses a year. And then we know some like Mid-South homebuyers that do 400 or 500 houses a year. We have, in all of our years with Terry and Liz at Mid-South, gotten nothing but rave reviews over not just the properties and how well they rehab the properties, but their property management. They're pleasant to deal with. They do an amazing job. But the reality is, we do have other turnkey providers we like in other markets.
Yes, when we first organized the Real Estate Guys radio show, we came up with a motto, and it was education for effective action. And we share ideas and information, and it's really about connecting people with ideas, information, subject matter experts, and providers, people that can actually help them act out on the education. Now, of course, we don't represent any of these people. We don't warrant what they do. We pick people to put into what we call our provider network based on good reputation, recommendations. We keep track of the feedback that we get from listeners and their experiences with them. There's a reason we've been with Mid-South for going on way over a decade now, probably 15 years, and they just have a great reputation. Another outfit we've worked with successfully over the years is based out of Jacksonville, Florida, and they're Southern Impression Homes, and they've got a built-in property management component. They do build to rent, so that's a little bit different than buying existing inventory and rehabbing it, which is what Terry and Liz do. And over the years, we've done business with a lot of other people in a lot of different markets. If you can't find a great turnkey provider, then you want to at least make sure you find a great property management company, because ultimately that's where it really that's where the rubber really meets the road. If you go buy a property that's located in the right market and you either buy it rehabbed or get it inspected and rehab it yourself, at the end of the day, you're going to have a property that can run well if it's managed well. Terry, I think, said in the interview that you're referring to that a good property manager can take a mediocre property and manage it to success, and a bad property manager can take a fantastic property and manage it to failure. Yeah. So the property management component is super important. But if you're interested in seeing the folks that we've worked with and we feel good about, you can just go to our website at realestateguysradio.com, and under resources, you'll see provider network, and you can check out. There's a whole bunch of people in there that you can take a look at.
We had Terry and Liz on the show a few weeks back, and we did have somebody who wrote in and said, hey, I didn't catch the name and information of those folks. They sounded great. So if you're interested in Memphis and wanting to see what they do there, they do have a bit of a waiting list. It's gone way down, thankfully. But if you're interested in learning about what Mid-South home buyers do, just send an email to Mid-South, just MIDSOUTH, Mid-South at realestateguysradio.com. It's Ask the Guys, your questions and our answers. We've got more questions when we come back, plus we're going to ask you a question as we play Real Estate Trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Forbes rated Memphis the best cash flow market in the nation. And our good friend Terry Kerr at Mid-South Home Buyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A-plus rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com. If you've been listening to the Real Estate Guys for a while, then you've heard about the legendary Investor Summit. Simply put, it's the highest level event we do. And the content, faculty, and attendees are amazing. If you're serious about taking your real estate investing to the next level, consider joining us. You'll spend more than a week with like-minded investors, world-class educators, and real-world professionals, and you'll have a blast. It all takes place next summer, so to get the details before they're released to the general public, send an email to summit@realestateguysradio.com with the subject Summit 2024. We'll add you to the advance notice list, and you'll be invited to spend a fun-filled week learning and networking with more than 25 class sessions and breakouts, plus small format roundtable discussions, great dinner conversations, and a ton of fun. Send an email to summit@realestateguysradio.com with the subject Summit 2024 and be among the first to get the details to join the Real Estate Guys and an all-star faculty on the 22nd Annual Investor Summit.
Hi, this is Anthony Melchiori from Hotel Impossible, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, now in our 27th year of broadcast. Hey, make plans to join the Real Estate Guys at the 49th Annual New Orleans Investment Conference. It's going to be an awesome conference. Folks like Jim Rickards, George Gammon, Peter Schiff, Danielle DiMartino Booth, and the Real Estate Guys will be there. You can get all the details and get invited to our listener party by sending an email to neworleans@realestateguysradio.com. It's Ask the Guys, your questions, our answers. We like to do a show like this every 8 to 10 weeks. If you've got a question for the Real Estate Guys, just go to the website at realestateguysradio.com and click the button that says Ask the Guys. Before we get to our next question, it's time to play Real Estate Trivia. That's our chance to ask you a question, which will have something to do with real estate, of course. As soon as you hear the question and think you might know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address. And the first person that gets it right is going to get one of my favorite books of all time, Turning Pro by Stephen Pressfield. That can be yours if you know today's real estate trivia question. Last week on the Real Estate Guys, we were wrapping up our Summer of Syndication series with attorney Mauricio Raould. And since we have Mauricio on the show, we asked this: which U.S. state has the most attorneys per capita? Well, the answer? Maybe not that surprising. New York, with 9.7 lawyers per 1,000 residents, according to the American Bar Association, based on the most recent population data. Second is Maryland, with 6.7 lawyers per 1,000 residents, followed by Massachusetts, with 6.2 attorneys for every 1,000 people. That's a lot of lawyers. Here's our real estate trivia question for this week. Why are most barns painted red? Yeah, if you were to go out around the world and look at barns, the majority of them are painted red. Why is that? It's not an accident. There's a reason. And if you're the first person to get it right, you're going to win an awesome book, Turning Pro by Stephen Pressfield. If you think you might know the answer, just send us your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Send us your name, the answer to the question, and your physical mailing address so that if you're the first to get it right, we'll send you Stephen Pressfield's awesome book, Turning Pro. That's today's real estate trivia question. It's Ask the Guys. Your questions are answers. The next questions, we have kind of two in a row that are around the same subject. So I'm going to read them both, and we'll kind of cover the big picture. The first comes from Albert in Ambler, Pennsylvania. Dear Real Estate Guys, what may I expect to learn and walk away with if I attend the Secrets of Successful Syndication in October? I want to get into syndication, and I want to make sure that this seminar will teach me to do it successfully. Thank you. Well, thank you, Albert. Great question. Before we answer it, question number 2 comes from Michael in Valley, Nebraska. He says, hey guys, is there a fee to join your club? You're probably rolling your eyes and thinking another tire kicker wasting our time. But I've attended other multifamily syndication seminars in the past, and when I learned that the only way to learn syndication was to, quote-unquote, join the club, pay the fee, and partner with the folks in the club, I was disappointed. Don't get me wrong, the people I've met are amazing and have been wonderful connections that I have benefited from. At the same time, I'm not comfortable paying to join a club of folks I have never done business with only to feel stuck doing deals with them. I'm looking for education, a playbook, and a team of resources I can tap into as needed. I also want to be viewed the same way by the community, a person that wants to be additive and provide value when I have something to offer of value. So, the long and short of it, am I attending your seminar with a bit of education and connections to sell me on joining the club, or will I get the things I'm looking for? Sorry for the long question. I recognize we may not be a good fit, but I love the Real Estate Guys radio show, and I consume as much content as I can, and I wanted to ask what I can expect should I attend the training. Thank you so much in advance. Mike. Now he says, P.S., I'm open to the possibility that my thinking may be off, and I'm open to being redirected if it is. So, love the candor and the question, Mike. And here's the big picture. We've been in the real estate seminar business for a long time. A lot of folks in the seminar business are in the business to sell you the next seminar. You go to, it used to be in the day, the free seminar, the $49 seminar. If you're going to a seminar that costs less than $200, you can be assured they have something to sell you, and they're going to sell hard. So nothing wrong with that necessarily, but it's important to us that everyone understands the agenda. I will tell you, to answer Albert's question, that what you'll learn in 2 days at the Secrets of Successful Syndication has taught dozens and dozens and dozens of people who have gone out and done the work and raised money and been successful without ever coming back to the seminar. It's one of the most gratifying things for us. I remember, you can remember I won't use his last name, but we'll say Ryan. We had a gentleman, Ryan, who came to the event a few years back, and he sent in this amazing unsolicited video testimonial about 6 months after he attended, talking about how much money he raised and how the ideas were so outstanding and all this. And we're thinking, do you know this guy? No. Do you know this guy? He just went to the seminar, took good notes, left with the workbook, and put it together. And again, now that we've been doing this seminar since 2011, there have been lots of people who have successfully done that. But having said that, I will tell you that the course is introductory. It assumes that you don't even know what the word syndication means. You'll probably have figured that out before you attend, but that you haven't done a syndication before, that you don't understand the legal and tax consequences, and that you need some help. So our mission in 2 days is to put all kinds of great speakers in front of you who aren't there to sell you anything, but are there to share what has worked for them. Some of them are industry professionals, like we'll have a tax professional, a CPA. We will have several lawyers, right? Learning that part of the business. But even more important, meeting people who got there before you did. Meaning you'll be sitting in the seat that they sat in a year ago, 3 years ago, 10 years ago, and now they've had phenomenal success. So Without further qualification, I will say that you're going to get a ton by coming to the seminar, and there is no hard sell to join any club or any program or spend any more money. Having said that, we do find that a lot of people need additional help.
Yeah, pretty much everything that we have was created out of dealing with people in the real world and seeing what they were experiencing. So in our own experience, we went from being real estate investors, and in my case, I owned a mortgage company, and Robert and his father, Bob, at the time, were running a real estate brokerage. And we all came together and we did education as a way to develop our clients. And then we found out that the education was so good and so popular, it became its own business. Meanwhile, the Real Estate Guys radio show was running, and we began to put all the components together. And we started doing these consultations with people. And as we would meet with individual investors and realize what they were looking for and what they were trying to do, there was a group of people that had enough money to invest in their own account, and that was great, but they didn't have a desire to. And then we had other people who didn't have enough money to invest in their own account, but they had a desire to invest. Well, the obvious answer is for those people to get together, and we were among the groups of people putting syndications together ourselves. So we did that for a number of years. After 2008, we recognized that the capital markets were broken. The flow of money into real estate, Main Street real estate, was broken after the financial crisis, and we saw a huge opportunity in private capital to step in and meet that need. So in 2011, we started teaching syndication, and it turned out to be really fortuitous timing because a year later, the Jobs Act was passed, and inside of that was this lowering of the regulations that allowed people who had private placements to advertise for accredited investors, putting them kind of on par with Wall Street. And I wrote a report back then called New Law Breaks Wall Street Monopoly, and the reason it was so significant is I just felt like, hey, if Wall Street understood what they just did, they wouldn't have ever allowed this to pass, and someday they're going to wake up. Well, that day's come. They're starting to wake up because the amount of money going into Main Street syndications has hockey stick. Mauricio Raoul, who is one of our faculty members at the Secrets of Successful Syndication, a syndication attorney, he pays attention to what's going on in the SEC, and they are looking at raising the limits from the accredited investor from 1 million to 3 million, meaning that it's more difficult then for people who have private placements or syndicators to reach those people who are underneath that $3 million threshold. And so there's things you have to know about how you go to market. And it's really important to understand the legalities. You can't just go put a deal together and throw some people together. So when you come to the seminar, we have an assumption that you don't know what you don't know. And we start with that premise. And what you're going to learn is you're going to learn to know what you don't know that you need to know. So we can't teach you everything, but we make you aware of the things that you need to be aware of so that you know when to ask help. The other thing is we teach you who you need to be, and there's choices to make. Some people like to focus on finding the deals. Some people like to focus on raising the money. Some people want to be expert or known in a specific asset class. I'm Mr. Mobile Home Park, or I'm Miss Self-Storage, or whatever it is. Other people want to be more like Warren Buffett, and they want to invest in a lot of different things. And so there's a lot of different ways to do it. Who you need to be depends on what it is you really want to do. So we talk through that. And then who do you need to know? Because you can't possibly know everything there is. The people who want to sell you more and more and more and more education depend on your A student mentality. Your A student mentality says, I need to know how to do every single thing in my business. Well, that's crazy. If you go to, say, for example, a doctor, and you have a heart condition and your doctor's a general practitioner, he's going to refer you to an expert. His job is to know what expert to refer you to. So if you think of yourself as in syndication as a generalist, somebody who understands, hey, here's the goal. We want to go build a successful portfolio. To do that, I need a great property manager. I need great funding. I need a lawyer to put everything together. I need a good CPA. I need people who can do all these pieces. So your role is to be the organizer or the sponsor or the general partner who puts all the pieces together. So the first thing you have to do is make a mental shift. So we talk about that. We talk about marketing. We talk about legal. We talk about compliance. We talk about risk mitigation, entity structure, insurance. We talk about retirement accounts. We talk about equity as a source of funding. We show evidence of success. We interview people who have done a whole lot of different types of deals and had different experiences in different markets. So you get a flavor of the possibilities. A lot of us come in, like Michael mentioned, multifamily. We don't teach a specific asset class. We have people syndicating multifamily, single-family homes, mobile homes, self-storage, ATMs, oil and gas, short-term rentals. The list is huge. It's just whatever, anything, movies, anything that requires funding can be syndicated if it's a profitable venture. Private capital is willing to make an investment if somebody will organize the deal and present it to them. That's what syndication is. In 2 days, you're going to understand all that, and you're going to be able to walk away knowing what you need to do. Now, to Robert's point, if you feel like, hey, I want to be part of a tribe, I want more help, we have a club. That club costs money because it costs money to run these things, and we don't get involved in your deals. We don't make any money on your deals, right? You come in and you pay to be in the club. And the mission of the club is to accelerate your success through a very simple premise, tribal knowledge. If you have to solve 100 hard problems to get to $1 million, and it takes you 90 days to solve each problem, it's going to take you 24 years. If you can solve those problems in 30 days, it's going to take you 8 years. If you can solve those problems in a week, it's going to take you 2 years. And of course, if you can solve them in a few days, it's going to take you several months. So the question is, how quickly can you solve the problems? Well, the best way to do that is to plug into a group of people who are solving the same problems you are and be connected to them and be connected to subject matter experts. So that's what our program is all about. It's real world. It's people learning from other people that are solving the problems. And it's about entrepreneurship, not investing. Those are two different aspects. You have a business which is entrepreneurial of investing. So you're both an investor and a business person. And a lot of people come in as investors. This is really a seminar about teaching how to make that leap into becoming a business person.
Now, the only time anyone's ever invited to join our club is during this event, and it is no run to the back of the room. There is no hard sell, today and today only. We only have this many spots. None of that mumbo jumbo. We're very respectful in explaining that if you've enjoyed what you've heard so far and you'd like to be around these folks more often and get your questions answered and get your problems solved and have greater resources, then join the club. If it's not for you, no harm, no foul. We're super excited about what's happening inside the club, but again, not for everybody. I will speak to your one point, though. This is not a club where people do business together. It isn't you have to pay a fee to be able to have access to these people. The big benefit of coming to the Secrets of Successful Syndication, frankly, is not just the content. It is the hundreds of other folks you're going to meet that are doing all kinds of stuff. Some are in the club, some aren't. If they're in our club, it says so right on their name badge. That way you can know when you meet somebody and you can ask them, hey, what do you think of the club? Or you can say, well, the club's not for you. I'm going to go talk to people that aren't in the club. Whatever you want to do, it's all good. But it's a great question. And I think the bigger picture is always understanding the agenda of anyone you seek help from. What is their motive? What is their reason? And we can't speak to other programs, but when you come to the Secrets of Successful Syndication, we'll explain exactly where our heart is on our club. And then it's your decision, not ours. Thanks for the questions, Albert and Mike. It's Ask the Guys. More questions on the way when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
The Real Estate Guys are throwing a party and you're invited. Join us at the New Orleans Investment Conference, November 1st through 4th. Now in its 49th year, it's the world's longest running investment conference and features some of the biggest names in economics and investing, including James Rickards, George Gammon, Danielle DiMartino Booth, Rick Rule, and Peter Schiff. The Real Estate Guys are speaking in multiple sessions, attending lots of others, and we're hosting an invitation-only party one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make your plans to join the Real Estate Guys, the New Orleans Investment Conference. With all that's going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com. And we'll see you there.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hi, this is Kim Kiyosaki. I'm the author of Rich Woman, and you are listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks so much for listening today. Hey, if you're looking forward to a bigger, brighter, better future, then you need the gift of clarity. When you know exactly what it is you want and what direction you're headed, life becomes so much easier. Sounds obvious, but it's amazing how many folks don't figure it out. If you feel like you're floundering at all, bouncing around from thing to thing, chasing the next shiny object, well, come join us for the 2024 Goals Retreat. It's called Create Your Future, and it happens the second weekend of January in Dallas, Texas. It is absolutely the top-rated event the Real Estate Guys do every year. Come find out why. Get the details at goalsretreat.com. That's goalsretreat.com. It's Ask the Guys. Your questions, our answers. This next question comes from Andrew in Memphis, Tennessee. First, I want to let you know how much I appreciate your show. You have given me the information and inspiration I needed to finally pull the trigger and purchase my first rental property 2 months ago. Thank you. Well, congratulations, Andrew. Love folks getting in their first investment, hopefully of many, many more. Here's my question. You always say to be looking for clues in the news. I have seen recently where Elon Musk is very concerned about population decline in the world. With just a little bit of digging into the numbers, it seems that there are not enough babies being born to sustain the current population in America, and even more so in other parts of the world like Europe and Japan. With housing economics having much to do with supply and demand, what will happen to my, hopefully large, portfolio of rental properties 40 years from now when there are fewer people to rent the houses that exist? Will I reach retirement only to find that my houses are worth less? Thanks in advance, Andrew. Well, Andrew, we talked earlier about thinking ahead, and this really is thinking ahead. And let's face it, demographics and population drive a lot of real estate decisions. When we look at the market as a whole, we say, here's all of housing in the world. That's just too big to look at. So there are some real quick shortcuts that we like to discern down to markets that make more sense. The first in the U.S. is tenant-landlord law. About half the states in the U.S. are much more landlord-friendly, and the other half are much more tenant-friendly. So an easy, quick way to discern is to say, I'm going to be a landlord. I'm going to pick landlord-friendly states. That probably serves you well. Another thing we look at is called net in-migration. Here's the concept. Every day, people are moving into and moving out of every single real estate market. The big question to ask is, are more people moving in than moving out? And when there's a positive net in migration, that can bode well. And these are cycles of demographics that are available long into the future. And so even if the premise is we're going to have less population, we're quite confident that the population will cluster and there'll be markets that will make a ton more sense than others. So it is long picture thinking, but a lot of real estate is driven by where people are going and how they need to use real estate.
And I think that's really the main point, because when you consider the properties that you're buying today, you ought to be buying them based on the supply and demand and local economic factors in the markets that you're buying them in. If, as you're watching the market, and it sounds like you are, clues in the news and thinking ahead, when you begin to see shifts in that particular market, you can adjust. Give you an example. At one point in history, Detroit, Michigan was the world's wealthiest city. There were over 2 million people in population. It was immensely wealthy, and housing prices was relatively expensive. What happened is, as the business environment changed and the industry changed, the policies of Michigan and Detroit in particular began to drive businesses and people out. And Detroit deteriorated from 2 million population to 800,000. At one point, at the bottom of that market cycle, they were literally giving houses away and bulldozing them to bring the supply down because there was too many. Now, the thing is, that trend took decades to play out. And if you're paying attention, you saw it coming. And the people who were paying attention got out. That's why people left. The people who stayed behind were the ones, quote unquote, holding the bag, if you will. So, Andrew, if you're just paying attention, which is why we say listen to clues in the news, then as you notice these long-term trends playing out, you begin to make moves and vacate a market and gravitate towards another market that you think has better conditions. And to Robert's point, there's macro, which doesn't really mean anything because it's just universal trends. I mean, it may be interesting to study macro for what's going on with lending or interest rates or taxes, but when it comes to real estate, it's really going to come down to mini, which I'd call like the state policies, and then micro, which would be the city or the county, and then nano, which is really the neighborhood. And when you really get down to understanding real estate at that smaller, tighter level, then you're going to be able to identify opportunities and be able to structure deals and be on the right side of these dynamics, especially because you're prone to look at them when maybe other people aren't. They just buy off a pro forma, or they say, oh, the house looks nice, or it's cheaper today than it was before. Yes, but it's been on a downward trend for 5 years, and that trend doesn't show any signs of reversing because what's driving it are bad things happening in the market. But if you're aware of those things, then you'll know not to buy there and you'll buy someplace else. So I think you're in good shape. The idea that somehow somebody's going to invent a technology that is going to make the need for housing in particular or real estate in general no longer be an important part of human existence, that's probably not going to happen. So it's really about getting the demographics and the geographics right. As far as Elon Musk and what he's talking about, that is a concern. There's a school of thought that think that humans are dangerous to the planet and consuming the resources, and the herd needs to be contained or culled the way you would a big population of livestock that are overgrazing. That's a way of thinking. I'm not disagreeing or agreeing. I'm just saying there are people who think that way. And then there's the other side of it to think human beings are assets. And the more of them you have, the stronger your nation is, the stronger your society is, the more consumers, the more production you have. And I think both things can be true because the more consuming that go on, the more resources get consumed. The more economic activity there is, the more energy gets consumed. And if these things are in fact finite resources and not renewable, or we are using finite resources until we can ramp up renewables, there could be a time when having too many people is a problem. So what Elon Musk is saying as a business person is less people is a problem economically. That's a perspective. There's a group of people, like I said, that think that having less people is a good thing. So again, you can make up your mind which one you think is good or bad. It doesn't really matter what we think because the policymakers aren't calling us up and asking us. But then we have to watch what is actually happening as you are. And then going back to this concept of picking your markets wisely based on what's actually happening, whether you like it or not, and then position your portfolio to take advantage of the opportunities created by what's happening and mitigate the risks that are based on what's happening. And if you're aware and prepared, because these types of markets move very slowly, you should have no problem staying ahead of the curve.
Andrew, I would suggest you continue to monitor this because you're right, these are long-term trends, but I would also submit that there's some other points on the curve to contend with, one of which is, as a nation, the United States is severely underbuilt in its housing stock. Now, people have different ideas. When we had Danielle DiMartino Booth on our summit, she said, yeah, it's underbuilt, but it's not underbuilt like the home builders think. They think it's 4 or 5 million, or the realtors think they think it's 7 or 8 million. She says, I think it's more like 1 million, 1.5 million. But what they can all agree on is that we do not have enough housing units at current population trends. So part of the way to help solve that problem can also create profit for you and your family. So that's just another point on the curve. I also would say that not all real estate's created equal. And so whatever properties you have now, I'm going to guess you're not going to want to end up with those same exact properties in those same exact markets 40 years from now. As Russ says, you're going to reposition those assets when your study dictates that it's time. When you hear a market that's changing, like Detroit changed so drastically. That'll happen. Usually doesn't happen overnight, but if you're watching it and paying attention, then you can make those strategic moves. I will say that when the world discovers that population is going down, you may not have as many people interested in real estate investing. So there will be opportunity. You just have to sharpen your pencil a little more to figure out where it is. Hey, if you have a question for the Real Estate Guys and you'd like your question on a future edition of Ask the Guys, just go to our website at realestateguysradio.com and click the button that says Ask the Guys and fire away. While you're there, check out our events page where you'll see not only the events that we put on, but the events other people put on that will be attending, like the 49th Annual New Orleans Investment Conference. It's going to be a ton of fun. It happens the first week in November in New Orleans, Louisiana. You can find out about that by sending an email to neworleans@realestateguysradio.com. Big thanks to all the folks who submitted questions, even those people who submitted questions that we didn't get to. Until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.